Coming up on Market to Market. Supporters and critics weigh in on Obama administration plans to fight climate change. And an Iraq War veteran embarks on a new mission to fulfill his agricultural dream. Those stories and market analysis with Virgil Robinson next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, August 1 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. U.S. employers added an average of 244,000 new workers over the past 6 months. That's the best performance in 8 years, but July came in weaker than expected, and the gain wasn't enough to hold the line on unemployment. According to the Labor Department, employers added 209,000 new workers to their payrolls last month. But the U.S. unemployment rate inched up 0.1 of a point to 6.2% as more Americans began actively looking for work. While most were unsuccessful finding a job, the increase suggests optimism is growing. And for good reason. Consumer spending is on the rise, manufacturing is strengthening, and auto sales have grown significantly in recent months. President Obama cited Friday's payroll figures as evidence that his administration is getting America back to work. But critics say some Obama policies are actually hampering job growth, including an especially controversial proposal to limit carbon emissions from the nation's coal-fired power plants. Hundreds voiced their opinions this week over proposed changes to federal guidelines and clean energy standards governing power companies. The Environmental Protection Agency held hearings in a handful of cities on the reforms. In June, President Obama called for a 30% reduction of carbon dioxide emissions by 2030. The overall goal is to reduce climate change. Speakers were limited to 5 minutes to make their case to the EPA in Denver, Atlanta, Pittsburgh, and Washington. The topic of air pollution traditionally sets off a loud debate over environmental values and economic vitality in the West. 3 of the top 10 coal-producing states are in this region of the country.
I'm a stockholder at many electric utilities, and I think they're not going about the environment the correct way. There's a new business model happening, and they're asleep at the wheel.
Renewable Energy Systems Americas Incorporated, a company invested heavily in green power, held a press conference to promote their clean tech agenda.
The United States didn't single-handedly create the global climate crisis, and we can't single-handedly reverse it either. But as a nation, we must stand up and take a leadership role in addressing it, and the Clean Power Plan is a significant step forward.
Despite new federal guidelines, states would have wide latitude in choosing how to meet the administration's aggressive goals. That leaves an uncertain fate for some of the West's coal-fired power plants. Arch Coal is active in the western U.S. and one of the largest coal producers in the world.
EPA has done a good job with these listening sessions, but I'm afraid they're not listening. So if they would try to engage the coal industry as opposed to trying to put them out of business, I think it'd go a long way with our ability to sit down with them and work in a joint manner.
Over the past decade, nearly 1 million rural Americans have served in the U.S. military. Unfortunately, many of those returning veterans face another battle, finding gainful employment as civilians. The Bureau of Labor Statistics reported Friday that the unemployment rate among post-9/11 veterans rose to 9.2% in July, nearly 50% higher than the national average. But one Iraq War veteran transitioned from warrior to worker effectively by embarking on a new mission to fulfill his agricultural dream. Josh Bittner explains.
Rural America could be considered fertile ground for patriotism. The ties of close-knit communities foster certain sentiments about people, the land, and hard work. And for some, protecting this way of life is more than just an option or an expectation. It's a given.
I was done with high school in 1995. 6 days later, I was standing tall in the yellow footprints at Parris Island, South Carolina for Marine Corps boot camp. My mom was a Marine, And so I told the recruiters I wouldn't sign anything unless they had in writing I could go to Paris Island and graduate from the same place my mom did 20 years prior.
Dan Romas pursued a military career that took him across the globe. But wherever the young Nebraskan was stationed, his thoughts would eventually turn to home.
One of my favorite memories as a child growing up in Lincoln is every other summer, the folks would take me and my younger brother and sister, and we'd go up and visit Grandma and the uncles on the farm in North Dakota. They had chickens roaming about the farmstead, and it was like an Easter egg hunt every day we were out there.
Reminiscing over similar rural traditions helped some homesick troops make it through long deployments.
We could have been talking about playing cards or about any number of things, but the common thread that we had was agriculture.
Once back stateside, Romas's dreams of farm life began to germinate. Stationed in New York State, he struck a deal with a local dairyman to help milk 80 cows in exchange for hunting rights. But the soldier soon found more fulfillment in work than play.
I really enjoyed that. You know, it was early days, long hours, but there's something about working on a farm that I think brings the best out in people because it teaches a very good work ethic.
While he loved agriculture, Romas prioritized his military service and the benefits it could provide. Once his initial commitment to the Marines concluded, he enlisted in the Army and earned a college degree. But while pursuing a master's, the Cornhuskers' educational path took a detour.
I was doing research for about a year and a half before I got the phone call calling me up for a deployment to Iraq.
Shortly after arriving in the war-torn country, Romas commanded a team during a massive troop buildup that came to be known as the Surge.
I was more than happy to answer the same call that my great uncle and grandpa did during World War II, my dad did during the Vietnam War era.
And while the controversial addition of 20,000 American troops in 2007 has been cheered by some for stabilizing Iraq, the long-term impact of such tactics can be a more elusive calculation.
There's always, those invisible wounds. It's very tough on everybody mentally when you lose a couple people, when you see things that the vast majority of the world's population doesn't see. You know, it can be tough to deal with sometimes.
Healthcare and other support for wounded warriors is administered nationwide by the Department of Veterans Affairs. Doctors say for conditions such as post-traumatic stress disorder, engagement is key.
We really hate to see stigma or misconceptions prevent people from seeking treatments. There are effective treatments for it, and getting out with farming and other social activities is one piece of effective treatment for PTSD.
When I'm out here, it's a way for me to detach or forget about everything outside these walls, outside of this farm. It keeps me busy, it keeps me active, and it helps me to move on.
Owning his own agricultural operation turned out to be just what the doctor ordered for Romas. And by networking through the VA, he found a variety of state agencies and other groups that help veterans realize their entrepreneurial dreams.
There's a good financial reason for doing what I'm doing now. It's a low startup cost, starting up a small poultry operation, compared to wanting to start up a dairy farm. Then there's the memories as a kid gathering up the eggs, being around the chickens on the farm in North Dakota.
I think it's been a great help for him to have him feel busy and be something that he's interested in and something that can be a service to other people.
A $6,000 grant and a $35,000 microloan covered the startup costs for Romas's Prairie Pride Poultry. And now 3 coops on 3 acres of land outside York, Nebraska, house a flock of 600 Rhode Island Reds. The winter-hardy breed was able to withstand the frigid weather and began producing eggs early this year.
Our motto here at Prairie Pride Poultry is "Happy hens lay healthy eggs."
Embracing a strategy of sustainability, Romus's free-range chickens aren't fed antibiotics or hormones, and they're given the space to roam and eat grass and bugs. Sticking to his values has allowed the veterans' operation to produce an economically viable product.
We want our business plan to be a true roadmap for business success.
Business specialist Carol Blood of Nebraska Self-Employment Services gave the green light to Prairie Pride Poultry. But Blood pulls no punches with disabled veterans and is quick to note the pitfalls and potential of being their own boss. Romus continues to receive business advice from the agency, which boasts an impressive track record in assessing the feasibility of new ventures.
Our success rate is around 71%. National success rate for people without disabilities, about 33%, so almost 3 times the national average.
And that success resonates with Prairie Pride Poultry. Dan Romus's hard work has garnered national recognition via point-of-sale branding on products produced by veteran farmers. And he has advice for fellow veterans considering a career in agriculture.
Hey, chick, chick. Hey, chick, chick. You have to go out and meet them halfway. You have to seek it out, do your research, be diligent, and, keep at it. There they come. And when you knock on their door, they're going to open it, and they're going to help you. And I'm living proof of that. They opened the door when I went knocking.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The private company Ag Resource predicted this week that U.S. growers will harvest a record 14.5 billion bushels of corn this fall. And as you might expect, grain prices continue to look for the bottom. For the week, September wheat lost 4 cents, while the nearby corn contract moved 11 cents lower. Old crop soybeans also headed south as the September contract gave up 40 cents. Nearby meal prices followed suit with a loss of $14 per ton. In the softs, cotton continued its sell-off as the December contract declined by more than $2 per hundredweight. In the dairy market, September Class 3 milk gained 85 cents, while the deferred contract moved nearly $1 higher. Over in livestock, fat cattle gave back all of last week's gain and then some as the October contract lost $3.80. Nearby feeders advanced more than $2, and the decline in hog prices continued as the October contract lost nearly $4.50. In the financials, the euro declined by 9 basis points against the dollar. Crude oil lost more than $4 per barrel. COMEX gold was off $10.50 per ounce, and the Goldman Sachs Commodity Index lost 18 points to settle at $616.50. Here now to lend us his insight on these and other trends is one of our regular market analysts, Virgil Robinson. Virgil, welcome back.
Thanks, Mike. Nice to see you.
We had a big week this week as far as export news is concerned. Did it support the wheat market? Terribly.
I think it did, Mike. One of the bigger weeks we've had in this crop year and in recent memory. Primarily hard red winter wheat, Mike, a higher protein type wheat, a Kansas City exchange wheat. And I think that underscores the concern quality-wise in some areas of the globe, particularly Europe, where they've actually had too much rain to accommodate the harvest.
Now, does the trade anticipate some spillover support on the other wheat contracts as this continues? Will the wetness around the world continue to support the balance of America's wheat?
Wheat exports in aggregate have improved at this point in time versus a year ago and versus the 5-year average. So certainly it is the grounds by which a corrective rally could take shape, Mike. And I hesitate to put a price number in front of folks, but any 30 to 50 cent rally in really any of the varieties, soft red, hard spring, I think provides an opportunity to either create some type of floor or go ahead and make a sale, particularly if it's your first.
Because as we look out over the long term through the balance of this winter, is the overarching price trend still downward, do you anticipate?
Yeah, I think it is. And to that statement, Mike, the International Grain Council just this week increased their global wheat forecast month over month. It's a bit below last year's record production, but not by much. So wheat supply, at least as measured by this data, indicates plenty of supply.
Okay. All right. So take advantage of a rally and maybe make a sale even if the price isn't the sweetest thing in the world.
I think for many that have done nothing to this point, yes, I would.
All right. Well, now let's jump down and talk corn prices. We saw corn continue to slide again this week. We're talking a bigger and bigger harvest. Where do you think the trade is anticipating this harvest to come in? Are we expecting it to continue to grow through August?
Well, large crops have a tendency to grow larger, Mike, and I think that's the mentality. I've not, in recent memory, can I tell you of a fixation on supply, the likes of which we have today. One concern that I think will perhaps gather some attention moving forward is the fact that while cooler weather, I think, has sustained this crop prospect, in many areas it's actually slowed development. Colorado, Minnesota, North Dakota, Wisconsin, Michigan, Ohio, there is, I think, and will be a growing concern in terms of optimizing their yield potential should we continue in the next 30 days to remain unseasonably cool. That, I think, will get some play here in the not too distant future.
And something like that, where you're extending the growing season in a year that's been abnormally cool, we should probably anticipate more chatter, anyway, of an early frost. Perhaps, is there a possibility the market might reward that thought with a little bit of a rally?
If it should become more prevalent and a consensus of thought, certainly it could. Mike, as you mentioned earlier in the show, export sales have been shifting away from old crop and more towards new, where the sales have actually been pretty strong. The market's come down significantly in value over the last several weeks, Mike, so at any concern, any threat, imagined or real, could create some type of short covering bounce or recovery.
Okay.
To bank on that, difficult for me to guarantee that, but certainly the market's susceptible to that type of behavior.
Okay. And as we look longer term in the corn market, we've got a question from one of our Facebook followers. Martin and Carol is curious, should we be marketing 15 crop already? Should we have been, or should we leave it open? You know, the threat of record production this year is bearish looking forward.
Well, there have been better opportunities than there are tonight, Mike. I would suggest that trying to put together some type of crop budget, I know it's difficult to do, but that would be the prerequisite in my mind before aggressively beginning to sell 2015 corn crop at these values.
Okay.
Clearly the next several months do not portend well for stronger prices, so we all need to acknowledge that and try and manage our businesses accordingly. So be looking for opportunities out there, but certainly do so with some objective in mind.
Sharpen your pencils first.
That's always a good thing to do.
Well, now let's talk soybeans. They were also the recipient of some pretty good news on that export sales report. We didn't see it translate into dollars in producers' pockets. What happened?
Well, again, they're fixated on this supply notion, Mike, and as you mentioned to me earlier, there are numbers out there that almost stagger the mind in terms of what this crop could potentially yield. I still think it's a little early. We've the month of August here to deal with, and as I mentioned a moment ago, there are select areas that are lagging normal development. So the frost notion will come into play at some point in time. Underlying business has been very good. New crop beans and new crop meal. Processing margins, Mike, the way I track them, both old crop and new, are better than they were a year ago at this time. So there is a pretty solid demand structure within the marketplace. But again, as long as we're fixated on this huge, huge crop, it's going to be difficult to generate any kind of significant price recovery unless we have a weather trauma.
Okay. And now same question as we look into 2015 or even 2016 on the prices with the notion of a record crop this year, and once folks have planted some beans, might keep planting larger bean crops. Same deal, sharpen your pencil and consider sales farther out?
Yeah, I think that's always a good strategy, Mike, but please understand at present the economics, both in the U.S. as well as in the Southern Hemisphere, are still slanted toward more soybean production. And the Brazilians, I think, will make an effort to sow more hectares this season than last. So it is conceivable in March or April of 2015, the supply of beans in the Western Hemisphere would be at an all-time high. So keep that in your mind as you think about your tolerance levels and your marketing tactics moving forward.
All right. Well, Linda, let's jump down to the livestock sector. We had a pretty big fall in fat cattle price this week. We had news of Cargill closing a plant Friday up in Milwaukee. Where do we see this fat cattle price trending?
Well, I think the market's going to remain strong, Mike, and we still maintain this pretty significant cash premium over futures. So it's very difficult for me to get excited about selling futures for anything other than a relatively short-term type behavior or strategy. Export sales to this point in time are actually above 1 year ago. I think the market's been spooked by several outside influences, the behavior of the security market, corporate profits not being perhaps what everyone expected them to be. We've geopolitical concerns across the globe. So keeping the speculative element of the marketplace nervous and on edge, and traditionally when that's the case, sidelines is their best policy.
Okay, so we'll see what happens next week. We've got another batch of corporate reports coming out to see what the broader economy does.
Yeah, and to the extent beef demand, I need to address that as best I can. I think it remains very solid. Mike, we mentioned export sales to this point. I kind of watch the Restaurant Performance Index, and we have data now for June. There's a 30-day lag period, but for I think the 23rd or 24th month, that index is above 100, which would imply and correlate, I think, to pretty strong restaurant dining and food preparation away from home. They're employing more people. I think the demand for beef remains strong.
Certainly. Few people go to restaurants for a salad. Now, as we talk feeder cattle prices, we've seen the corn continue to fall. Feeders stay very strong. A trend anticipate to continue?
I'm sorry, Mike, I didn't.
Feeder cattle price probably going to stay strong as corn falls?
Yeah, as long as we sustain a strong live cattle price and relatively inexpensive feed, yes, I think feeder cattle remain strong. The recent inventory report indicated the smallest herd size since '73. Clearly seeing fewer beef cows and heifers in the slaughter mix. So there's an effort underway, but it takes and requires quite a length of time to rebuild those numbers, Mike. So this is not an overnight phenomenon.
All right. Now, Virgil, before we let you go, we've seen the hog market continue to slide this week. October hogs roughly down $8 in 2 weeks. Have we topped out in that market? Are we adjusting to the new reality of hogs?
Well, the cash market's come down, I think, based on expectations of a little bigger slaughter numbers beginning here in the immediate future. But again, Mike, I am reluctant to make any kind of a stand in futures when October and December futures are so discounted to the lean hog index. I just don't sense that to be a viable hedging opportunity. Perhaps some type of option strategy for those who are most concerned here. But I still think the live hog market's going to remain strong as a function of red meat price strength, poultry price strength, and demand.
All right. Well, thank you for taking the time to be with us, Virgil.
Thank you.
That wraps up this edition of Market to Market. But Virgil and I will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll examine the outlook for agricultural trade. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.